Good morning.
Good morning. How are you today?
Very good, thanks. How are you?
I'm good. I'm still fighting my back problem, but outside of that, I'm good.
My back problems are just starting.
I know. Welcome.
I'll be calling you.
All right. Well, hey, everybody. Welcome today. We've got 30 minutes, and today we're really going to dive into condos and townhouses and the difference and why this is so important as a real estate agent. Before you put somebody in your car, making sure that from a lending perspective, there's clarity around the type of dwelling that they're purchasing, because there's a material difference between financing a townhouse and financing a condo. And we're going to dive into everything you need to know to be equipped to get out there and sell condos, which is such a popular type of dwelling these days. I think with affordability, I think with rising home prices, first-time home buyers in particular are looking for that kind of entry-level type of dwelling, and condos are a great fit, but there's a lot to know. So Welcome, Tara Bradley.
Thank you.
Let's start by doing a quick market update. I saw some good stuff this morning, so give us an update. I'm going to go over to the chart here and tell us what's going on.
So since the last time we did this, well, what's interesting is this week we don't have a ton of like major news. When we think about major news, we're talking inflation, employment numbers. Those are two of probably the biggest like market moving reports, if you will, that come out that can be drastic movers. This week we have just like Fed speakers talking about their perspective, I guess, what they think, and that can move the markets. So
yeah, we're up 22 on the day, which means that mortgage rates are probably either flat or slightly better.
Yeah.
And the 10-year is running 4.4, which is a little bit down on the day, but still under 4.5, which is a good indicator for mortgage rates.
Yep.
And I think all the talk right now is just like you said, it's all about the Fed. It's all about, when they're going to raise rates. Are they going to hold? Are they going to drop rates?
Yep.
I think the reality is nobody knows ultimately what's going to happen, but so much of what they say impacts our market, the bond market, and the 10-year treasury.
Yep. Yeah. Kind of wild. Yeah. So we'll just continue to keep an eye on inflation and jobs. I think those are going to be the two things. I mean, we had a nice inflation report. I think it was last week. Kelly, we can kind of see in the chart when we saw that kind of go in our direction. Now, I do know the media was saying mortgage rates are plummeting, and be careful what you hear, because yes, it was a nice improvement, but we're talking, maybe an eighth in rate. So it's not like all of a sudden we're down to 6.5 from 7.5.
Right. And on that note, I think, as people ask me all the time, so what's it going to take, to get people off the fence, if you will. And, I think the word is when we can get into the fives, it doesn't even matter if it's 5.99. I think psychologically that is what is driving people to kind of get off the fence, but it also helps with affordability. But on that note, we still are bringing so many different affordable lending and strategic deals together, just with seller concessions and buy downs and, certain community lending programs. We have all kinds of stuff out there. So I would just say, don't feed into it, get the real facts. If you have particular buyers in certain areas, reach out. We'll let you know what some of these programs look like and if the buyer meets them.
Yeah.
All right, so let's get into condos and townhouses. This is one of my most favorite things to talk about, because it's something that so many people don't really know. So what is the difference, Tara?
What's the difference? So I know in the MLS, agents can mark either apartment or flat or townhome. So it's super important before you're marking that to know the difference between a condo and a townhome. Yeah. So you're going to want to look for very specific verbiage in the legal description. That's the key. Now, I'm sure agents have access to the legal description. We look it up on the county assessor. We just find the deed, and that's how we determine if it's a condo or a townhome. And we're looking for certain verbiage. So things like horizontal property regime. Obviously, if it says condominium right there, that's your, it's a condo. Unit versus lot are other indicators. So,
So if you see this in the legal description, it's highly likely that the property you're going to show your buyer is in fact a condo, even though MLS may say that it's a townhouse. Tara, why is that? Why does MLS refer to things either apartment, loft, or townhouse?
Rather than condo?
Yeah.
Because I don't know why MLS does that. They should fix it.
Right? There is no like real condo classification in there. It's apartment loft, it's attached, it is townhouse. So I think just from a clarity standpoint, it doesn't make it easy for an agent just to be like, push the condo button, right? So this is where so many conversations between the agent and the buyer, we have these conversations with the buyer up front. So they understand if they're looking at a condo, here's what we're going to be looking at. If they're looking at properties on their own online, here's what they want to look at. Just because it says townhouse on Zillow or Redfin or NMLS, it doesn't mean that it's truly a townhouse. And they certainly can always text us the address and we'll check. But the real difference is with a townhouse, you kind of, the way I think about it is you own a piece of dirt. And in a condominium, you're kind of owning airspace. And that's a material difference. So from a lending standpoint, the guidelines require that lenders go through a lot of checks and balances to ensure that that condo is warrantable. So what does warrantable mean?
So just meaning that they have sufficient insurance, sufficient reserves. They've got no pending litigation. They don't, I mean, the thing about it is you want to be sure that an HOA is, a lender does, and to protect the buyer, that the HOA is sound, that they are not going to like fall apart. And then you've got what, I mean, I'm sure the biggest would be like increasing HOA dues that could be really significant.
Yeah.
Or then the possibility to sell that home in the future.
The other thing I wanted to point out is that condos, it has nothing to do with the way that the property looks. And I think historically we kind of think, oh, you know, it's attached, or oh, that it's, you know, it looks like a condo, but really it all comes down to the legal description and how that property or those properties were developed. And like we've got here in Scottsdale, we have houses that are completely all attached and they kind of look like either a townhouse or a condo. What's interesting is the way that those properties were platted, they were single family attached, and that's how the legal description reads. So, you know, again, the legal description tells all from, and it's what is going to be that drives financing. And hey, if you guys have questions, just drop them into the chat. We'll get to those in a second because I know this is a big conversation. All right, so a few more differences here. That undivided percentage of home ownership, you kind of spoke to that. Very often when we're looking at legal descriptions, we'll see like 1/1/16 of blah, 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 blah. Could be common areas, could be the entire project. So again, just these are things that we're looking at when we have buyers that are wanting to buy a condo or a townhouse.
Yeah. Well, in HOA fees, it's talking here. So on townhome, well, either. Okay. So HOA fees are typically higher on a condo because it's going to insure more of the property. Whereas a townhome, you yourself as the buyer will need to get more insurance for the home. The HOA typically covers less. I think that would be the main difference between why HOA fees are higher or lower between the two.
Yeah. And so how do lenders kind of, okay, let's say it is a condo. We've identified that it is a condo. We're going to kind of walk you through this condo certification and what the HOA has to provide to a lender. This isn't just to us, this is to all lenders. And then the process that the lender is going to go through here in a second. But before we do, here's a few more differences. So again, the exterior property insurance is not always, sometimes it's carried by the HOA. Usually the buyer is obtaining HO6 insurance, which is kind of what we would say studs in, right? It's going to be their insurance, the buyer's insurance would cover studs in on the property, so interior content. And then the HOA on a condo is generally studs out. But again, it's very important to read because we see all kinds of crazy things, right, Tara?
Yeah.
All right. Okay. And here's just an example, just for
a legal description.
Kind of a verbal. So this is one. So the declaration, it states, includes a parcel of real estate, which would make you think that the homeowner owns the land and we have a townhome. this is not the case. See the remainder of the sentence, including one building containing 10 units, which makes the project condominiums. So again, sometimes these things get really confusing, and I think the best thing you can do is if you have buyers and you're out shopping, just text or send it over to the lender so they can double check and they can give you how they're going to view it.
Yep. Or if you've got a listing, if you have a listing and you want to know, like, is this, is it a condo? Is it a townhome? Is it FHA, VA? And we'll just kind of jump into those. Are they approved? Like, we're happy to help. We do it all the time. We can help look it up and let you know for sure.
I love that. And then, one thing from a listing agent standpoint, I would probably talk to the seller about getting a condo questionnaire completed from the HOA. That way, as an agent, whether that project may be eligible for a limited review, a full review, depending on the buyer. And we're going to talk about what drives a limited review and a full review here in a second. But it can be a game changer and a deal breaker, depending on what's going on in that condo HOA cert. So I think just getting the facts up front would be helpful. That way you know how to market the property, right?
Absolutely. Yep.
All right. So keep in mind that nothing's set in stone. Okay, that's all. We're done. Let's go.
Everything's changing daily too, by the way. So.
The guidelines change, the words townhouse, all that fun stuff. And let's talk about detached condos, which again, we see these pop up. So going back to the way that the property looks, okay, the property looks like a single family detached house, but guess what? It's actually developed as a condo. So in that situation, there's still a process that the lender has to go through. Do you want to speak to that?
Yeah, I mean, I feel like I've done like one in the last 10 years. But I don't know that the process is very different. I mean, we're still looking at pretty much all the same things. Insurance may vary a little bit, but it just, it's going to vary by project.
Yeah. And I think it's important to know if you are in Arizona, there are certain areas such as Sun City, and Sun City is kind of grandfathered in to this whole legal description verbiage. And so there's actually a state statute, and this is really important to know because if you're dealing with a lender that doesn't know that, they're likely going to try to classify that property as a condo when in fact it's probably a Gemini twin. It's a different process. They have to know the state statute, and that can make or break the buyer's process, their interest rate, because interest rates are higher on condos than they are townhouses. So it's really important to know that if you are listing or have buyers in Sun City, Arizona, it's so unique. It's a very old type of development, and they are grandfathered in to, we'll call it a non-condo classification. How about that? That's the easiest way to say it. All right, well, let's take a peek real quick at what a crazy condo questionnaire looks like. Right. So this one is for the PUD, which is for the townhouse, right? So this one's easy. It only has 5 questions. Easy peasy. Yes.
That's easy.
Yeah. And then I don't see we actually have a condo one, right?
Do we not have one?
No, that's okay. All right. So let's go into, we're going to talk about 3 different programs: conventional, condo financing, FHA, and VA. So let's dive into conventional because this is the one that, depending on the buyer and as a listing agent, depending on what you know from that HOA questionnaire that you have asked and received, now you know, does that buyer need to fit a certain profile, because the only way that condo maybe gets through from a lending standpoint is on a limited review. So this is a lot, you guys, and if you want this, feel free just to drop condo in the chat or text 480-725-0150 with condo, and we will send this out to you. So this is like gold. I'm telling you, gold right here. And so first and foremost, new projects are going to kind of be different. So here's some information on new projects, but I want to focus on established projects, limited, and full reviews. So a loan may be eligible for a limited review if the home will be a primary residence and the borrower is contributing 10% down or more. 25% in Florida if it's a refinance, or the home will be a second home or investment property, and the borrower is contributing 25% down or has 25% equity if it's a refinance. Again, Florida a little bit higher. All right, so that's what's going to define if our buyer is eligible for limited review. And here's why it's important. Get ready, because for limited review guidelines, this is the only thing lenders are really looking at. Cannot be an eligible project, so condo, hotel, multiple units that are single deed, or mortgage projects currently in litigation for construction defects. Okay, no single entity may own more than 20% of the total units. No more than 35% of the total square footage of the project is used for commercial purposes, and evidence of insurance in the name of the HOA. Now, did I say anything about owner-occupied residences in that stat? No, I did not. And this is why it's so important. If you know that maybe there's a high concentration of investors or second homes in there, then you're hoping for a limited review buyer, which means it's got to meet this criteria. Because with a limited review buyer, meaning 10% down on primary residence, 25% down second or investment, then the lender's not getting into the rest of the details. Now, if you have a buyer that doesn't qualify for limited review, here's what the lender's looking at. They're looking at everything we talked about, so those 4 bullets. Now we get into at least 50% of the units must be owner-occupied second homes if the loan is sold to Fannie Mae, blah, 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 right?
Yep.
Budget must have at least 10% of the total income allocated in replacement reserves. Guys, that is so important, because if you have a budget that is out of whack, this is where that one thing can catch the approval from a lending perspective. And we see it. We see it all the time. So this is why just stressing and understanding, if you've got buyers that can do 10% down or more and it's a primary residence and they're looking at condos, this is a win, because it's less documentation and hoops that the lender's going to jump through. All right. And then lastly, no more than 15% of HOA delinquent dues. So that's what's going to require a full review. Any thoughts on any of that, Tara?
Very good. Not really. I mean, I would say, just obviously we educate our buyers. I know the buyers are getting a lot of this information themselves from the HOA. So they're going to be up to speed on some of this information. And just know when the lender orders either the limited or the full review in the process.
Yes.
Because it costs money. And you don't want to, do your inspection and then you do your appraisal and then the HOA cert is ordered 10 days before closing. And some of these HOAs take like 2 weeks even to get them back.
Yeah. Or they charge by how fast they turn it around.
Yes.
So we see it all the time. We'll quote to the buyer, expect 150 or 250. Well, sometimes they're like, if you want this in 5 days, it's 350. If you want this in 7 days, it's 250, and kind of, that type of cadence. So I do think ordering the condo questionnaire is very important. We generally do that based on once the buyer's through the inspection and we know that the buyer's proceeding, we coordinate with the buyer's agent and they give us the green light, yes, go. And then our next point of action is getting that condo questionnaire, because we know if the buyer's solid, that questionnaire on a condo could still be something that, puts the loan in an ineligible type of position, or maybe the buyer's got to come to closing with an extra 5% down to make it a total 10% to get into the limited review bucket, right? So many different strategies there. Okay, let's get into FHA.
Okay.
So FHA condos. If I have a buyer that is buying an FHA or using FHA as their financing, FHA has a lookup tool that you can go to, and you're going to put the information in, and it's going to come back and tell you if the condo is approved and if it was maybe approved but it's expired, etc. So do you want to walk through this screen?
Yeah. So I think on this one, it kind of depends. So the reason we did this lookup by zip code is because we have a buyer who is like particularly looking at condos. That's it, just condos in this zip code. And they keep typing in, one of them, and it's expired, not approved. And we'll talk about what you can do with that. But I'm like, if you want to just find out the ones that are approved in a zip code and then go find listings that are in those, like this is a really great tool to use.
Like this one is approved, right?
Yep.
But like, look, this is where it gets, you have to really pay attention, right? Because this one was approved, but it expired in 2017.
Yeah.
We had one recently where it was approved and something like the expiration date was like 60 days out and we were closing prior to the expiration date. So we snuck in underneath that.
Yeah. Gotta be careful.
Yeah, like for sure.
Yeah.
But I think that, but just kind of understanding FHA does have its own list of approved condos. It's easy to access. If you ever have questions, you have a buyer, or again, you're taking a listing and you want to know if the project is approved so you can offer financing and MLS to FHA buyers, this is the place to go.
Yes. Yes. And I would say, I mean, if you're not finding, like if you're typing in the condo project and you're not finding, it doesn't come up at all. I mean, something could be spelled wrong. The tool can be a little wonky. So then I would encourage you to just to look up by zip code and see if you see it in the list like Kelly just had up. And then if it is expired or rejected, don't automatically assume that you can't get an FHA buyer because there are things that you can do with a lender who will help you.
Right. So let's talk about that. I think they're called single unit approvals now. They used to be called spot approvals. It's all the same. It's essentially where maybe that project is not approved on FHA's mass condo approval list, but maybe the condo can still meet financing. Now, some of the tips we give agents is first, if I were an agent and I had a buyer that just fell in love with this property, but they have to go FHA, maybe they can't go conventional, then I would go back in and kind of go 6 months back and just see, has there been any closings in that project that had FHA financing?
Right.
And if so, then what that lender did was a single unit approval, which we can do as well. So that's just kind of gives us like, yay, it's already been done in here, we can go do it. Now, if it doesn't, if you see no FHA in there, then it's still a process. So what we're going to do is get in touch with the HOA. Buyer's going to have to pay for the HOA certification. It's going to come back. We're going to see if the project meets the lending guidelines. And Tara, is there any additional kind of insider research agents can look at through MLS and closed transactions to kind of just get some awareness?
I mean, other than seeing if there's been FHA, yeah, I mean, there is. So once if you want to try the single unit approval, there's more thing, they're going to look deeper into the HOA. So one of the biggest things is that the project cannot have over 10% FHA concentration. So I mean, is that available in MLS? Probably not. I don't know.
No, I think it's just closed. That's why I'm always like, what's closed in there? And the other thing too is just, has there been any financing in the project, right? The last 6 months or 12 months, no matter what type of financing the buyer is doing, if it's all cash, and no Fannie Mae or Freddie Mac or no FHA or no VA, then it might be a project that just is not warrantable, which means it's not meeting agency guidelines with any loan program. And that does exist. So I think just those are always red flags when, agents they'll come to me and be like, okay, I looked and there's been no financing in here. So then we go into it. Doesn't mean we stop, doesn't mean we don't try to vet it, but we go into it knowing that there might be something going on in the HOA that makes it non-warrantable.
Right.
And non-warrantable, there's financing for that, but it's completely different. It's generally a higher credit score. It's generally more money down.
Yes.
And I think also just the risk of buying a condo that, when you turn around and sell it, if the HOA isn't focused on getting itself in a position to be warrantable, it could limit your buyers because not every buyer can qualify for a non-warrantable home loan.
Right.
So,
So cash buyers, cash buyers can do anything.
Yeah. All right. So lastly, let's touch on VA real quick. So VA also has a lookup tool, and this is what it looks like. You would put the information in, and then if it comes back approved, pretty much you're good to go. There's not a lot of hoops that lenders go through with VA, which we love VA. When it comes back on the VA, we're like, yay, easy, because then it's really just insurance and a few other things. So it's not a traditional like full deep dive in. But what if it doesn't, what if it's not approved on VA and it was at some point? I think VA reviews their condos, I think it's every 2 years.
Yeah.
Condo approval list.
So there will be, I mean, you'll see accepted without conditions. That's your approval with VA. If you see HUD accepted, that's back in the day when FHA and VA had reciprocity, like VA would approve anything FHA had approved. That's just not the case anymore. I think that's 10 or 12 years ago that changed. So the only green light you have is accepted without conditions. Otherwise, everything else is red light. It may not come up at all. If you get red light, like HUD accepted, that's red light, or it's not on there, there are options for a VA waiver. So it's the veteran diving in with the VA offices and understanding why it's not approved, and then them acknowledging that, yes, I understand why it's not approved. I'm okay with it. If the veteran's okay with it, then a waiver can be granted. So it's pretty cool.
Yeah, and I think a lot of lenders don't know that, you know, so I feel a little, I would really want to make sure that they understood though, because it's
Sure.
a lot, you know, it's a lot going on in condos, and I would just feel that, you know, what is it, and then what's the risk to it, and just really making sure that they understand that there is a potential risk. And then also, again, as a buyer, you know, I think every buyer is a seller at some point in their lives. So if that condo project never evolves, even if you're using VA and you get the waiver to use VA, is there any other financing happening in the condo project? I think that's something that, you know, would be important to know from a seller perspective in the future, you know?
Absolutely. Absolutely.
Wow, we blew through that. We have 3 minutes left. All right, you guys, if you have any questions, post them in the chat. And Tara, thoughts on the market?
We're slow. I think it's slow. I think, you know, there's lots of stuff out there that make people nervous. I still think there's tons of opportunity, and it's still just talking people through that opportunity and encouraging them to buy now. So
yeah, I mean, I think, you know, we had a great April, we had a good March. So I feel like there's a lot of activity in spring. I think May is generally kind of gets a little bit slower simply because people are distracted. So graduations and, you know, kids getting out of school and summer trips and all that fun stuff.
Sure.
But I do think that there's a few things out there that are really helpful to buyers right now from an affordability standpoint. And we have some amazing community lending programs across the state and really across the country. So if you have buyers that are looking at particular areas, then be sure to reach out to us and let us share with you if there's any community lending programs out there, because many times they have reduced interest rates. Maybe there's a grant program available. Maybe there is better terms available just in these kind of certain areas around the country. So affordability is still one of those things that we talk through. We still are seeing seller concessions in many areas across the country, which helps to create affordability. So you know what? I think it's just one of these things. We're going to move through this. Real estate markets have cycles, and the Fed and what they're going to do with rates is going to be something that will impact us. But until then, there are different solutions out there, and it's really just about education. So 100%. If you guys have any questions, do not hesitate to call or text 480-725-0151. It's our home loan hotline. And if you text it, that comes to me and the whole team, so we can hop in and make sure that you get answers to whatever questions you have. Tara, thank you so much for showing up today. Diane, thanks for showing up. If you have any other questions or thoughts, we're here for you. Hope you guys have a great day.
Have a good day.